OG John AG here. Silver is back on every watch list, every social feed, and every late night chart session. And this new piece from Ad Hoc News asks the exact question you and I should be asking. Is this the moment to ride silver's next big squeeze? Or is this just a hidden leverage trap waiting to blow up 2026 traders? In this video, we're going to break that down like adults. Why silver is suddenly in a high energy, high emotion phase again. How the safe haven story and the green energy story are colliding in one metal. What the Fed, inflation, and the dollar are doing to this trade, why the gold-silver ratio is flashing long-term signals, and how industrial demand plus social media hype can create both massive opportunity and brutal shakeouts. I don't sell courses, I don't sell trading signals, I don't run a VIP group, and I will never DM you asking for money. I am only on YouTube, this channel John AG here, and the name is OG John AG. If it's not here, it's not me. Let's start with the vibe check. Segment 1, vibe check. Silver is emotional again. The article opens with what it calls a vibe check. Silver is in a high energy phase, not a sleepy sideways grind. Futures traders are glued to every Fed headline. Stackers are posting monster boxes on social media. Macro funds are positioning around the next big move. The market feels punchy. Rallies are explosive, brutal. Pullbacks are savage, emotional. Both bulls and bears are swinging hard. You can see it in the feeds. YouTube, silver price analysis, silver squeeze, long deep dives. Instagram, silver stacking accounts showing off tubes and kilos. TikTok, short hype clips about silver being the next big play. That doesn't mean a moonshot tomorrow. It means retail interest is very much alive. The metal is trading more like a high beta macro stock than a boring commodity. That's the environment you're trading in. Segment 2, two faces of silver, safe haven, plus green tech. The article says silver sits at the crossroads of two narratives, classic precious metal safe haven. The Fed spent cycles pushing rates to restrictive levels to fight inflation. Every CPI release PCE print, jobs report Powell press conference has become a volatility trigger for silver. When markets think the Fed is near done and closer to cuts, real yields soften, the dollar often eases, and silver tends to rip upwards. When the Fed sounds hawkish and higher for longer, the dollar flexes. Silver can slide into heavy grinding sell-offs. At the same time, inflation fear is not dead. Headline inflation is off the peak, but services and underlying pressures keep investors nervous. That's why poor man's gold is back. People stacking silver as a hedge against monetary debasement, huge government deficits, slow erosion of purchasing power, ultra-modern green tech, such electrification metal. Silver is, not just shiny vault metal, a critical industrial input in modern tech. The article highlights solar panels, silver in photovoltaic cells, with global solar capacity projected to keep climbing as decarbonization and energy security stay priorities. Electric vehicles, EVs, silver in electrical contacts, wiring, and advanced automotive electronics. 5G and electronics, from smartphones to data centers and industrial automation, silver's conductivity makes it essential. Put together, safe haven investors pull silver whenever macro risk spikes. Industrial buyers pull silver whenever green energy and tech cycles heat up. When both pull at the same time, silver doesn't move. It jumps. Segment 3. Macro drivers. Fed, inflation, dollar. The deep dive section zooms in on macro. Key idea. The Fed is still the puppet master. Silver is priced in dollars and pays no yield. When markets price higher for longer rates, capital chases cash and bonds, pressure on silver. When markets start to price, a slowing economy, future rate cuts, or stickier inflation with flat yields, real yields compress, which is textbook bullish for precious metals. The article says traders are basically asking three questions right now. Is the Fed really done hiking, or could an inflation flare-up force more tightening? Will upcoming data show smooth disinflation or nasty upside surprises? How quickly would the Fed pivot from hold to ease if growth cracks? Answers to those questions will define whether silver enjoys a supportive macro mix or faces another stretch of headwinds and range-bound price action. Then there's the US dollar index, a stronger dollar, headwind for silver, especially for non-US buyers. A softer dollar after dovish Fed tone or weak data, sheer tailwind as global buyers step in. Smart traders, watch the dollar trend and Fed expectations as core context, not as background noise. Segment 4, gold-silver ratio, the valuation cheat code. The article calls the gold-silver ratio a valuation cheat code for macro traders. It tells you how many ounces of silver it takes to buy 1 ounce of gold. When the ratio is high, silver is cheap relative to gold. When the ratio is low, silver is rich relative to gold. In recent years, the ratio has swung from extreme highs to more moderate levels, reflecting violent cycles in fear, liquidity, and risk appetite. High ratios, silver very cheap versus gold. often coincide with deflation scares, dollar strength, or heavy silver underperformance. That's when contrarians talk about the silver catch-up trade and potential squeeze. The article notes, many strategists believe that over the long term, silver still has room to outperform gold if industrial demand stays strong. The energy transition continues, not in a straight line. Silver is more volatile, overshoots both ways, but that's why macro funds like to build positions on dips when the ratio looks stretched in gold's favor. Segment 5, Industrial Backbone, Solar, EVs, 5G. Unlike gold, which is mostly monetary jewelry, silver is deeply industrial. The article breaks it down. Solar silver is used in photovoltaic cells because of its unmatched conductivity. Tech tries to reduce silver per panel, but total installations keep climbing. Net effect, ongoing structural silver demand from solar, driven by policy decarbonization targets, energy security goals, EVs and autos. Modern vehicles, especially EVs, are electronics packed on wheels. High electrical and electronic content, silver in contacts, relays, sensors. Wiring electronics in 5G phones, servers, data centers, industrial automation, 5G base stations, all need efficient conductors. Silver is at the heart of those supply chains. The article's key point, this industrial anchor is why silver often recovers strongly after macro sell-offs. When prices get too cheap, industrial buyers and manufacturers step in to secure future supply. Deep dips can turn into springboards, not just pits. Segment 6, Sentiment and Whales, Fear versus Greed on Steroids. Silver's price is not just about fundamentals, it's about emotion. The article shows 2 layers. 1. Structured capital, hedge funds, CTAs, commodity index products. These players show up in futures positioning, options, flows, CFTC data. Sudden jumps in open interest, big block trades, or shifts in options skew can suggest whale activity, large players hedging or making directional bets on breakouts or breakdowns. 2. Grassroots stacking culture. On social media, you see people stacking ounces and monster boxes, talking about getting out of fiat, calling silver undervalued and manipulated, talking silver squeeze long after the meme faded from headlines that subculture matters. It provides a persistent base of physical demand. Every serious dip, some of that community buys more metal and removes it from the liquid pool. This creates a wild combination, structured leverage in the futures/options market and sticky, emotionally committed physical holders. That's exactly where massive opportunity and hidden leverage trap live side by side. Segment 7, Key Levels and Who's in Control, Bulls or Bears? The article doesn't give exact numbers, but talks about zones. On the downside, areas where previous sell-offs turned into accumulation. These are zones where physical buyers stepped in, tactical traders went long, dips got absorbed. On the upside, resistance zones from recent peaks, failed breakouts, to shift into a new leg higher. Silver needs a clean break and hold above those bands, backed by volume and supportive macro. On sentiment, bulls are driven by long-term industrial demand, potentially friendlier Fed path valuation versus gold and versus history. Bears lean on strong dollar risk, potential renewed hawkishness if inflation flares, silver's history of punishing late FOMO with brutal drops. The article calls this a balanced but tense battle. That tension is where opportunity lives. Fade emotional extremes, buy dips into real support, or ride confirmed breakouts with macro wind at your back. Segment 8, Massive Opportunity, or Leverage Trap. At the end, the article asks the big question straight. So is silver a massive opportunity or a hidden leverage trap going into the next phase of this cycle? The answer: it can be both, depending on your behavior. If you chase every hype spike, use oversized leverage. Have no risk plan, silver will turn into a trap. Its volatility is designed to wreck careless traders. But if you treat silver as a high beta macro plus industrial play, respect its volatility, scale enduring fearful phases, balance physical, ETFs, and maybe select miners, silver can become a powerful diversifier, a long-term hedge, a high-torque piece of your portfolio. The article's bottom line: silver doesn't need a perfect world. It needs a messy, inflation-prone, tech-hungry energy transition world, which is exactly where we are. The next big move could be a grinding accumulation phase or a sudden breakout that shocks both bears and casual bulls. Your edge: planning entries, sizing like a pro, letting the market show you whether the next move is a real squeeze or just another shakeout. Segment 9, Call to Action, for your viewers. You're watching John AG. Here, and I'm OG John AG. If this breakdown helped you see silver's next big squeeze as not just hype, but a mix of macro industrial demand, social sentiment, and hidden leverage, then hit subscribe right now so you don't miss the next deep dive. Smash like so this kind of context-heavy content doesn't get buried under noise. Comment squeeze or trap and tell me which side you lean toward after hearing this. Massive opportunity or hidden leverage trap. We'll keep tracking Fed expectations and the dollar gold silver ratio in key technical zones, industrial demand trends in solar, EVs, and tech, and how sentiment and positioning set up the next big move. Silver is not sleepy. Respect the risk, but don't sleep on the opportunity.